Good evening, ladies and gentlemen. Charlie, thank you very much for your introduction. As we were just meeting up downstairs, the University Secretary was just advising me that this is university election time, and the lampposts of the university are festooned with clarion calls for election support in the forthcoming elections. And it reminded me of one of my most precious possessions, which is an old cutting that my friend Susan Deacon helpfully sent me a couple of years ago from a student newspaper in the mid-1980s, which featured both her election candidacy for a post within the university campaigning activities and also, regrettably, mine into the bargain. And let me say that the years appeared to have been much kinder to Susan than they had been to me. But it was interesting to look at the issues and the questions that were being wrestled with by student politicians in the 1980s. I'm not sure if they've moved on a great deal by the 21st century, but nonetheless an important part of our campaigning activity and history. And it's, for me, a great pleasure to be here in the University of Edinburgh tonight to deliver this lecture and to continue to renew the very deep acquaintance and fondness that I have for this university and for the outstanding quality of the educational opportunities that were presented to me in the 1980s, in which I know and observe from the way in which the university contributes to, as Charlie described it, this most momentous debate that the country is facing, an important and valuable resource in ensuring that the country comes to a well-informed and well-considered conclusion in the referendum this September. In November of last year, the government published Scotland's Future, Your Guide to an Independent Scotland, which provided a very comprehensive blueprint of the arguments for Scottish independence. In advance of that, we published a report setting out the economic opportunities that independence would open up for Scotland, and taken along with the reports, the 4 reports from the Fiscal Commission that we established, along with our economic prospectus and our balance sheet publications, we've essentially mapped out a range of the economic policy choices available under Scottish independence and provided with them a detailed assessment of the Scottish economy. And that essentially has been an important part of our contribution to the debate to frame the choices that would be available to people in Scotland were we to vote yes in the referendum in September. And this evening, I'd like to consider some of the opportunities that are opened up by that possibility. Scotland has huge potential with immense natural resources and a wealth of human talent. Internationally, Scotland would have the 14th highest levels of GDP per capita in the OECD and would be ranked 4 places above the United Kingdom. There is no doubt that Scotland can be a successful independent country. We have thriving growth sectors such as food and drink, life sciences, creative industries, tourism, financial services, and many others. Our strengths are particularly evident in our higher education sector, where we have more top universities, including this institution, per head of population than any other country in the world. One interesting fact that has been repeated by both the Scottish and the United Kingdom governments is that even if every penny of oil and gas revenues were excluded from Scotland's national accounts, then our tax revenues per head are broadly in line with the UK's as a whole. And our strengths and international standing are being recognised. In a report published last month, Standard & Poor's stated that Scotland would qualify for their highest economic assessment, highlighting that Scotland has a wealthy economy, high-quality human capital, flexible product and labour markets, and transparent institutions. The foundations for an independent Scotland are therefore strong. I don't think anybody in this debate seriously disputes that factor. So if everyone is now agreed, and I think this is a general presumption in the debate, and it's certainly a welcome development in the debate, that Scotland could be independent, this evening I'd like to talk to you firstly about why Scotland should be independent, and secondly why we must be independent if we are to meet the economic challenges we face and fulfil our potential as an innovative and prosperous nation. The case for independence rests, for me, on a simple but I believe compelling premise. The people who care most about Scotland and have the biggest stake in our country's success are best placed to take decisions about Scotland's future. That's the people who live, work, study and operate businesses here in Scotland. With the limited powers of devolution, we have already seen an improved performance across a range of key economic indicators, both in absolute numbers and relative to the rest of the United Kingdom. Since 1999, GVA per head on a workplace basis has increased from the 5th highest of the countries and regions in the UK to 3rd highest behind London and the South East. Full-time weekly pay has increased from 5% below UK levels to within 2%. And Scotland's employment rate has moved from a position of 2.6 percentage points below the UK to 0.7 percentage points higher in the last quarter of 2013. Nowhere is this difference in policy choices clearer than in the area of education and skills. Culminating in free higher and further education tuition, our Opportunities for All initiative, support for modern apprenticeships and the retention of the education maintenance allowance. Through Scottish Enterprise and Highlands and Islands Enterprise interventions, we've been able to grow our key sectors, and through the work of Scottish Development International, we have been able to secure our top place on foreign direct investment indicators. I cite this evidence to make the point that with limited control over the economy, we have been able in Scotland to deliver since 1999, whether that has been actions under the administration of which I have the privilege to be a member, or under the previous administrations led by the Labour Party and supported by the Liberal Democrats. We have been able to use the limited powers of devolution to create better economic outcomes for the people of Scotland than were the case in advance of devolution. So essentially, the premise upon which I base my argument is that with the ability to undertake different approaches to decision making, to take different decisions on behalf of the people of Scotland, we can deliver better outcomes. And if we can do it to a limited degree with devolution, then the opportunities that I will set out tonight on the exercise of full responsibilities under an independence scenario is an opportunity that I think beckons strongly for the people of Scotland. To expand Scotland's ability to take our own decisions and to guide our own economy to success, we need to take a set of decisions which are informed by the needs and the aspirations of people in Scotland. We could continue to leave key decisions and the tools to tackle long-term challenges with Westminster governments, but in my assessment and my estimation, that would not give Scotland the ability to take the decisions that are required to meet the long-term challenges facing our economy. We have to consider as a country in September which choice between establishing Scotland as an independent country or remaining part of the United Kingdom will best allow Scotland to build sustainable public finances based on a strong and resilient economy. Which option will provide the greatest opportunity to grow the working age population in Scotland? Which choice will rebalance the economy and provide the certainty that Scotland will have the powers we need to compete in a global marketplace, to support our own key sectors and to make the most of our opportunities? I believe it is essential that Scotland has the powers of independence to meet those challenges. Independence would create the opportunity for Scotland to pursue a more productive, resilient and fairer economic model, a model focused on delivering sustainability and economic opportunity for all and not for a limited few. With independence, Scotland would move from the current framework where the vast majority of decisions that influence Scotland's economic structures are made by the UK government on a one-size-fits-all basis, to a system where future Scottish governments could create a genuinely focused set of complementary policies aligned with Scotland's unique strengths, needs and preferences. And in doing so, we would start not just from a strong economic and financial base, but on the basis of an equitable and common sense settlement on independence. I do not intend to dwell on the issues of process tonight, other than to urge all of you to consider each issue with which we are faced on the basis of common sense and the ability to resolve these points by negotiation, applying the principles set out in the Edinburgh Agreement of 2012. On currency, much has been said and written in recent weeks as to whether Scotland will use the pound as part of a formal currency union. As Charlie Jeffrey told the Scottish Parliament in perhaps an observation that I hope many people will follow, that economic analysis may well, and I quote, be subsidiary to political considerations and strategies, close quotes, during the campaign period. So for tonight, let me remain focused on the economics. The Scottish Government's views on the currency issue are based on the exhaustive work of the Fiscal Commission Working Group, which is comprised of internationally renowned economists, including 2 Nobel laureates. The Fiscal Commission published their first report setting out proposals for the macroeconomic framework in February 2013. The Fiscal Commission not only concluded that a formal monetary union would be in the interests of both countries, but also set out a fully designed and sustainable framework, including a system of shared financial regulation and a fiscal sustainability agreement within the sterling area. Much of their assessment of the issues involved in a currency union is in line with the technical commentary from Mark Carney, the Governor of the Bank of England, who provided a helpful assessment of monetary unions in his recent speech in Edinburgh, recognising their benefits and detailing how they can be designed successfully. The Commission met again last week and considered the Governor's technical comments, the recent acceptance by the UK Government that in all circumstances it would remain legally responsible for payment of debts, and the intervention from the Treasury and the Chancellor. In response, the Commission stated, and I quote, "The analysis to date by the United Kingdom Government overstates the risks of a formal monetary union. For example, their analysis of the Scottish financial sector is overplayed. At the same time, it fails to fully capture the benefits." The Commission's view remains unchanged that a formal monetary agreement is in the best interests of both Scotland and the rest of the United Kingdom, and the Scottish Government shares that view. Yet, whilst the politics may overshadow the economics for now, in the event of a yes vote, the dynamics of political debate change, and the necessity of reaching a constructive agreement signed up to by both governments kicks in. The campaigning will have to stop, and the common sense agreements will have to start. After all, that is in everyone's mutual interest for that to happen. At the heart of the debate about independence is the nature of the economic opportunities that open up as a result. In considering these opportunities, we must set out a clear direction to ensure the economy develops in a fashion consistent with our aspirations as a country. The policies pursued by successive UK governments have resulted in the UK becoming one of the most unbalanced and unequal economies in the developed world. These imbalances are key reasons why the UK lags behind many of its competitors in a range of indicators. The Business Secretary, Vince Cable, recently argued that London is becoming a giant suction machine, draining the life out of the rest of the country. I suspect if I'd used that language, I would have been perhaps somewhat pilloried for the analysis, but nonetheless it's Vince Cable's analysis and it makes a serious point to all of us. But despite the public statements from UK ministers about the need to rebalance the economy, there is no evidence that the current UK system is able to deliver a better geographic balance, or that it will put the interests of the wider UK before those of its economic powerhouse of London and the South East. In 2012, GVA per head in London was nearly 75% higher than the UK average, and analysis suggests that regional differences in GDP per capita are greater in the UK than in any other EU country. In the recent Cities Outlook 2014 report, 79% of private sector jobs growth between 2010 and 2012 occurred in London. It is good news that Edinburgh ranked second, but the scale of the disparity is significant. And since the financial crisis, the UK economy has become more unbalanced rather than less so. Growth remains unbalanced between different sectors. Since 2009, output in the service sector in the UK has increased by 6.3%, compared to an increase of 5% in output in the manufacturing sector. The UK's current account deficit in 2013 quarter 3 was at its highest level as a percentage of GDP since 1989. And UK business investment in 2013 quarter 4 remained nearly 20% below pre-recession levels. Despite Scotland's historic reputation for industry and innovation, manufacturing has declined substantially, with services now estimated to account for around 70% of output and 80% of employment in Scotland. Scotland is home to a wide range of highly successful companies, and I want to see them reach their full potential. The country has key strengths in a variety of sectors that I've listed already, and with independence, we could have the tools to meet the challenges that are required to sufficiently boost those sectors of the economy and to provide a counter to the so-called London effect within the UK economy. Scotland would be able to make use of the range of economic levers to develop a coherent and ambitious strategy for promoting business growth, rebalancing the economy and diversifying Scotland's industrial base. In order to promote investment in trade, an industrial strategy would be aligned with trade, foreign policy and international engagement in order to provide a real opportunity to take advantage of the status of a newly independent Scotland on the global stage. This would provide us with the platform to boost manufacturing and focus on new opportunities in key industrial areas. In particular, that focus would extend to traditional manufacturing and engineering skills, such as those involved in supporting the offshore industry, which are highly transferable to the new low-carbon economy that has been such a feature of the government's economic strategy. An industrial strategy in an independent Scotland could include support for investment, including research and development, support for Indigenous companies and ownership by strengthening the role of the Scottish Investment Bank, expanding skills development by bringing together employment and skills policies and putting modern apprenticeships at the heart of the retraining effort within our economy, expanding our manufacturing base with a particular focus on maximising the opportunities for our offshore energy potential, both in relation to oil and gas, but also particularly in relation to the opportunities in the offshore renewables sector, and the targeted use of loan guarantees to support and to encourage private sector investment in the economy. Each of these connects to a vision of an innovative Scotland where we build on our current skills and talent, but use the opportunity of independence to transform Scotland's position so we can once again say that Scotland contributed towards the invention of the modern world, as the Herman assessment so aptly describes Scotland and its contribution to innovation in the past. As with any advanced economy, innovation and productivity underpin long-term economic growth. Economies that are innovative are more resilient and adaptable to change. Even relatively small improvements in productivity can have significant impacts on economic performance. For example, our own analysis within government estimates that boosting labour productivity by just 1% could raise employment in Scotland by over 21,000 over the longer term. Scotland has a relatively strong base of innovation to build on, with a clear tradition of scientific expertise, a highly skilled workforce and world-renowned universities. Scotland's higher education R&D is world-class. In 2011, our expenditure as a percentage of GDP was third highest in the OECD. Around half of Scotland's university research has been assessed as world-leading or internationally excellent, and Scotland is ranked third in the world in terms of citations per researcher. Last September, the annual QS Global Ranking of Universities again showed 3 of our universities in the world's top 100, and not unexpectedly, this university was amongst them. At the 2013 Times Higher Education Awards, Edinburgh also won the award for Outstanding Employer Engagement. It's no accident that we're seeing improvements in the international competitiveness of our universities. We now invest over £1 billion annually in higher education, and we're doing more to build on this. Earlier in the academic year, we announced an additional £14 million to help boost the global reputation and standing of Scottish universities. £5 million of this came to this university. Also this year, we'll spend in excess of £370 million on university research and knowledge exchange activities, an increase of over £100 million since we came to power in 2007. And within our existing powers, we are going further to help create the best environment for businesses to thrive in partnership with academia. In the progress that has been made in recent years, it has become clear that cohesion and alignment across public bodies is vital to achieve success across a number of challenges. Working with our enterprise agencies, the Scottish Funding Council and partners like Universities Scotland, we have all focused on aligning our services to the growth potential of our businesses and industries, improving mechanisms for effective knowledge exchange between business and academia. For example, here at Edinburgh, some 162 spin-out and start-up companies have been formed at the university in the last 5 years. For our part, this government began in April last year by investing a further £30 million over 5 years in a network of innovation centres, and I was privileged to launch the latest of these in industrial biotechnology here in Edinburgh a few weeks ago. These innovation centres will bring together universities, businesses and others connected to key sectors to solve demand-led problems facing industry in Scotland by supporting innovation for future growth. These centres mark a significant change in the relationship between our universities and businesses, and they are very much seen as game changers in that process of innovation. Innovation has been a central part of this government's current economic strategy, and while we've seen relatively fast growth in business R&D spending between 2007 and 2012, with expenditure increasing by over 15%, whilst it declined by 3.3% across the UK, business R&D spending in Scotland remains at 0.6% of GDP. So despite our efforts at every level, on current international comparisons, Scotland and the UK lag behind our key competitors. For example, as a proportion of GDP, Denmark and Finland spend nearly double on research and development than we spend here in Scotland. In short, we still have a long way to go to fulfil our potential in this respect. However, our powers are limited within the current framework, and I hope the explanation that I've given of the efforts that we have put into supporting innovation as part of our existing economic strategy have demonstrated our willingness to use every single device at our disposal to strengthen the additional effort we can put in to strengthening the availability of support for research and development. But we are constrained by the fact that the further range of levers that we believe could be of assistance to us are currently reserved to the United Kingdom government through the reservation of tax powers and the revenue and legal frameworks that constrain some of our activity in this respect. So what independence enables us to do in the field of research and development, which is absolutely crucial to increasing the innovative and productive capability and capacity of the Scottish economy, would be opened up as a consequence of independence. If we look at some international examples of research and development, there are some excellent lessons to learn about how small independent countries can utilise the powers at their disposal to create a more innovative climate and framework. Finland is an excellent example of a country that has established a coherent and all-encompassing approach to an innovation system with collaboration between universities, businesses and public sector agencies. Business investment on R&D in Finland in 2011 accounted for over 2.5% of GDP compared to 0.6% of GDP in Scotland. Overall, Finland has the third highest total expenditure on R&D as a percentage of GDP amongst the countries involved in the OECD analysis. At the centre of Finland's policy is an innovation agency which provides grants, funding and other support to businesses, universities and research institutions undertaking R&D activity. The Teches agency, which my colleague Fiona Hislop visited last week, bases its approach on careful foresighting of prospects that will benefit Finland's economy. It is then able to develop tailored innovation support programmes for the long-term benefit of the Finnish economy. Key to success of this approach is the fact that Teches has at its command a full access to a wide range of interventions and support mechanisms and can combine these in whatever blend their customers require. Essentially, a broad range of flexible interventions to enable the organisation to make the most focused and targeted input into the Finnish economy. And through Finvera, the state-owned specialised financing company, businesses, including entrepreneurs and SMEs, are able to access a range of loans, guarantees, venture capital investments, and export credit guarantees to assist in the process. This combination of Teches and Finvera working to deliver shared growth goals is one of the contributors to Finland's impressive R&D performance. Finland has successfully built up skills and technical experience in a variety of different areas and is able to support new and growing competitive businesses. This is very much in contrast to the limited innovation support powers that we have available to us in Scotland today. If we truly want to see a major step in Scottish business innovation that will transform our economy, we need to acquire the powers to give us full responsibility for innovation support in its entirety, including control of all fiscal levers. A Scottish Agency for Innovation, perhaps with a more innovative title than the one I've just outlined, would be created to become the engine behind business innovation growth in Scotland. The careful and targeted use of tax credits and allowances in an independent Scotland would be a crucial area that could make a difference and break down the barriers which limit private investment in R&D and greater harness the acclaimed research in our universities. As I've demonstrated in the analysis of Scotland's existing contribution to R&D to date, we are able to utilise the flexibilities and the resources at our disposal to create as creative a climate as we can for innovation. But to leverage private sector investment, we need to acquire the range of responsibilities and levers to encourage and motivate private sector investment, which currently is beyond the responsibilities of the Scottish Government. Such incentives could be targeted at either R&D-related expenditure or income that results from investment in R&D, or to support more effective collaboration between different players. For example, under independence, we could explore the potential for an SME research and development tax allowance and payroll schemes similar to those that exist in other parts of Europe and which have the benefit of encouraging and incentivising companies to secure the necessary input of new personnel to support the process of innovation within the company base. Research has shown that this type of scheme can have strong positive impacts with high-tech startup SMEs, increasing their R&D spending, helping with cash flow, stimulating demand for innovation, and creating high-value employment as a consequence. Such a scheme has the potential to contribute to a step change in investment in Scotland and be a concrete illustration of how we could develop further the next platform of economic growth within Scotland. Additionally, we need to consider that despite recent improvements, access to finance continues to remain a problem for some viable businesses, especially growth and supporting SMEs. The Scottish Government is already working directly with banks to improve the supply of finance, and using the existing devolved powers, advisory support is being made available effectively through the Enterprise Agency network to help companies improve their chances of securing funding, and we've expanded that support through the work of the Scottish Investment Bank, which delivers risk capital and debt finance support to companies focused on innovative technology. This complements the wider support available in the private sector through the business angel syndicates. But we need to build on these foundations with a range of interventions to benefit Scottish businesses. For example, by borrowing cheaply from the market and lending to Scottish growth and exporting SMEs, we could pass on the benefit to encourage and support the development of company investment plans and, as a consequence, to support development within the Scottish economy. Independence could provide the opportunity to consider wider policy developments, including the scope and leverage of activity, and also the reach and targeting to increase SME lending in Scotland. So there's a range of different measures we could take to realise the high value, high productive components of the Scottish economy that are an essential part of the requirements of strengthening the long-term productivity of the Scottish economy. But it's not just direct support for innovation that is also important. It's ensuring that we have the best talent available is also vital. And one of the objectives of the Scottish Government's proposal set out in Scotland's future is to establish an approach focused very directly on attracting the best talent to Scotland to contribute and to support our economic development strategy. A new visa system is essential to ensuring that we can attract and retain the best students and researchers from across the globe to help take forward such innovation within Scotland. With independence, we could be enabled to reintroduce a post-study work visa to encourage young talent to contribute to the Scottish economy. The visa would allow recent graduates from overseas, educated by universities across the country, to remain in Scotland, to work or to set up a business, retaining skilled and educated young people as part of Scotland's labour force, contributing into realising the opportunities available to us. So in preparing Scotland's economy for the future, a future where, whatever the result of the referendum, success in our global world will be based on playing to our strengths, adapting and innovating, and being able to turn innovation into a competitive national economic benefit, we see independence as a prospect that offers these possibilities to the people of Scotland. It offers what many entrepreneurs and innovators crave, the ability to solve a problem and to meet the long-term challenges that we face within our economy. There will, however, be limitations on what the existing framework can provide for us in ensuring that we can achieve these objectives. If we look at the economic performance of Scotland over recent years, we can see that despite the progress that's been made under devolution, despite the good effort that has been put in since 1999, Scotland has not been able to overcome some of the competitive and comparable weaknesses of our economic performance compared to other countries. If we look back over the last 50 years, the Scottish economy, if it had grown at the average growth rate of comparable European countries, by 2007 our GDP would have been 42% higher. At the very least, we need to ask ourselves, why have other independent countries managed to grow their economies more quickly than Scotland has been able to grow our economy? We can look, as I have done tonight, at different approaches to the way in which other countries have met those challenges. We can also look at the way in which we have tried to resolve some of these difficulties in the immediate past, in wrestling with the difficulties of the economic recession within the United Kingdom. When the UK entered recession in 2008, the Scottish Government took the view that we needed firm action to support investment in the economy. By 2009, when we dealt with the incoming United Kingdom Government, we dealt with a situation where a very different approach to our investment in the economy and the capital estate of Scotland was being taken by the United Kingdom Government. A reduction of 27% in our capital budget was a decision taken by the United Kingdom over our heads, which has had significant consequences for the performance of the Scottish economy. That decision alone, taken with a significant effect on the Scottish economy, damaged the prospects for a swifter and a more sustained economic recovery in Scotland. UK business investment remains nearly 20% below pre-recession levels, and manufacturing output is nearly 9% lower than pre-recession levels. The impact on households is significant, with weekly earnings in real terms for full-time employees in Scotland falling back to 2004 levels in 2013. As far as possible, I've taken action as Finance Minister to mitigate the full impact of these capital budget reductions on the Scottish economy, including through switching spend from resource to capital. And over the next 2 years, the Government will be spending approximately £8 billion on infrastructure investment within Scotland. But we are only able to use a limited number of the levers that should be available to us to try to improve the performance of the Scottish economy. And it is out of that frustration that the Scottish Government aspires to attract the full range of powers and responsibilities that would enable us to strengthen the Scottish economy and take the long-term action that is required to ensure that we establish a much more competitive platform for the Scottish economy. As we look at the outlook for public expenditure within Scotland, continuing on the current path is to follow a model that will see Scotland's budget cut by 10% in real terms over the current 5-year spending review period, with plans to extend reductions to public services until at least 2018-19. So there are real constraints in what we are able to do, given the arrangements of devolution and the necessity of us securing the wider range of responsibilities to enable us to strengthen the foundations of the Scottish economy. One of the issues that we wrestle with, and we've wrestled with it in relation to the impact of some of our capital activity, is to look at the analysis of what is the consequence of the interventions we take to stimulate and to improve the economic performance of Scotland, and where are the beneficiaries of that intervention. Under the Scotland Act proposals that the government is currently implementing, the Scottish Government will be responsible for a proportion of income tax, but a whole range of other taxes, such as corporation tax, national insurance and VAT, will remain reserved to the UK, along with welfare spending. If we were to look at some of the modelling we've undertaken on measures that can improve the performance of the Scottish economy, an illustrative 1% increase in the 4 largest onshore taxes in Scotland, along with a 1% reduction in benefit expenditure as a consequence of encouraging more people into employment, would see just 12% of the increased revenue flow into Scotland under the current constitutional arrangements. Essentially, there would be £350 million of new economic benefit generated to the public finances. £45 million of that would flow to Scotland. £305 million of that would flow to the Treasury. So there is an economic cost to not having at our disposal all of the levers of financial responsibility and the ability to retain the benefits of the decisions that we take and the financial implications that those measures give rise to. So in summary, independence brings with it a wider range of responsibilities and opportunities, not just to rebalance the economy, not just to promote innovation to create a more prosperous Scotland, but also to ensure that we establish a virtuous circle of how that investment and the steps, those policy interventions to support growth within the Scottish economy can then be regenerated to input into the wider growth and development of the Scottish economy. It is my belief that for the long term, it is essential that we have the tools to give businesses here in Scotland a competitive edge, to promote innovation and encourage an outward-looking global focus to provide as many opportunities as we can for the people who have chosen to live, work, study and establish their economic livelihoods here in Scotland. That is something that I believe can only be achieved with independence. The successes of devolution, the gains we have enjoyed from having independent decision-making powers over a range of responsibilities, demonstrate fully that the best people to take decisions on Scotland's future are the people who live and work here in Scotland. Businesses and universities in Scotland will have their own ideas on policies in an independent Scotland, and I'm sure will contribute to the formulation of an agenda that will contribute to the future economic success of our country. I look forward in the coming months to a debate about what is possible and achievable in Scotland and what our ambitions should be. This is an opportunity that is open to very few countries, and I look forward to hearing these ideas as we move forward to Scotland's referendum on the 18th of September and the opportunities and possibilities that arise as a consequence. Thank you very much.